All right. Hello, hello. Looks like we are live. This is my second live stream attempt. Hello, my name is Luke Stokes, and I will talk a little bit about DeFi, decentralized finance. It's all the rage. And, let me check in here. Okay, there we go. I'm going to swap over to this view here. I tweeted about this a little bit ago, and I'm kind of putting, sorry, I got a bunch of background noise too, neighbors, dogs barking and all that kind of stuff, but we'll see how this goes. I put this tweet out there talking about DeFi, and a lot of people think it's just like, the rage is this new thing, like, oh, you can make all this money and stuff, but you know, is it really? Like, is it just a shell game? Is it a way to transfer wealth and value from people who really know what's going on, or from people who don't know what's going on to people who really do, the people who write the code, the people who understand deep, technical details of economic realities? I don't know. This is something I want to explore a little bit and get your thoughts on, and also remind people to be very careful. This isn't really new in terms of the blockchain industry either. I remember BitShares doing decentralized finance many years ago. I was playing around with it in 2016, 2017. Many were playing around with it prior to that even. I was part of the global settlement event with BitUSD, which is a stable token where you could, in a very similar way, kind of stake your own blockchain resources and generate this token using your own collateral. Very similar to what Vigor is doing and what a lot of other DeFi projects are doing. And so this stuff isn't new. What is new, I think, is the innovations as far as like the insurance and distributing the risk pool and all that kind of stuff. So that I think is interesting, and that's something that is worthwhile. But also, even more important, I think, is the decentralized nature of the governance of the system. So that way, if there are changes and things that have to happen, you have a group of people with a shared goal that can actually coordinate those changes in a way that benefits everybody. Right here, I'm showing the member client, and this is using, it may look familiar for those who've been following me, this is using the eosDAC technology stack, which I kind of worked with the team quite a bit since the launch of eosDAC to try to get this DAC factory and this DAC software out there. But as you can see here, there's elected custodians that are actually on a multi-sig via this DAC authority account, for example. And this DAC authority account is actually controlling the DAC. So as the audit, as the system generates and the calculations for the votes and elects different custodians, it'll actually update this automatically so that you have the right people supported by the community in charge of the contracts. Now, something I want to point out with Vigor, and I was talking to them yesterday in the Telegram, is that the main accounts you're interacting with, such as Vigor Lending, are not yet decentralized. This is pre-launch, they're not live yet, they're still, a single key holder controls the contract code. So all the code in here that's actually keeping track of, where the money goes and what happens, that's still being controlled currently by whoever has the private key to this public key right here. Now that said, they did tell me in the Telegram they are planning on decentralizing this by the time they get the code stabilized and they're ready for launch. And they will then again control it by the elected members of the community. So there's another thing that's interesting about this approach is there's a full constitution as a DAC. So basically, the requirements of the custodians, the responsibilities, the legalities of that, all that can be figured out here. And everyone who wants to participate is actually has actually signed an agreement to do so. They've actually signed a constitution, which is pretty cool. So there's a level of kind of accountability that exists within a DAC that I think is really interesting. So really excited to see the eosDAC technology stack actually being used. Yeah, definitely very cool. So without further ado, here's the actual interface. And I've been playing around with it over the weekend. I've been moving stuff around quite a bit. And the way this works, as far as I understand, is that the early custodians are actually given the VIG token. Now there's not to be confused with this token here. This is a different version of the VIG token that's used for voting. And basically all the elected custodians, if you get selected, let's see if I can view M6. If you get selected, in one of these request proposals gets approved, then you get added to the group. And if you get added to the group and you start getting votes, then you can eventually become a custodian if you get into the top group. And I was a custodian for a while, very early on, and I apparently earned a bunch of VIG tokens, like a lot of VIG tokens, more than I realized. And it's kind of surprising that those tokens now have value. As you can see here, they spiked up quite a bit. If we look at the week chart, it's just kind of insane, actually. The last few weeks have been pretty incredible. So I just kind of woke up to this recently going, whoa, what the heck is going on here? And I've seen these kind of big spikes in price happen before, and so I just wanted to like caution everybody, be careful. You know, I can remember, for example, when the eosDAC token went to $1 and then crashed down to like less than a penny. And a lot of people are pretty upset about that. So just, you know, be careful. And if you are participating in the market, you know, just be wary of FOMO, fear of missing out, or of irrational exuberance. You know, be very careful. But without further ado, I just want to demonstrate this a little bit. This is really cool, especially the tutorial. Check out this tutorial. I think it's really impressive, where it kind of walks you through step by step what each and every little thing that you're looking at is and what it does. And I think this is so amazing because, as you know, I'm working with the Foundation for Inter-Wallet Operability, FIO, and I'm really focused on usability in blockchain and cryptocurrency and how we can make it easier. So it's really important to think through, you know, how to improve this stuff and how to educate people on how all this works and what the risks are and all of that. So this does a really good job of that. It kind of walks you through all the little pieces of what's going on and how it works. Super well done. Very, very impressed with that. And you could set this up so you can, you know, deposit your VIG tokens, your EOS or your Vigor as to be able to be lent out. Now there are risks involved with this as well. You have to be careful of. You can then use your own collateral and generate Vigor, which is a $1 peg stable token, and you can actually then, and this is the interesting part, you can then take your Vigor, put it in collateral, and borrow out more crypto, which you can then sell for additional Vigor and just keep the cycle going. So you can actually, and this is where DeFi kind of scares me a little bit, is you can actually keep increasing your risk by using your lended tokens to generate more risk and lend even more tokens to yourself and just go, it's basically like fractional reserve lending in a sense, but it is fully backed, and that's the part that's different than traditional fractional reserve lending. But what it does create a situation for is the individual can create too much risk for themselves if they're not careful, and then they can get called on. What I really love about this, again, is the transparency. So you can just see everything that's happening on the blockchain. And you can also see, for example, here's someone that got liquidated, and you can see the details of what happens when they got liquidated. So which insurers essentially got the collateral for this person becoming undercapitalized. And so before it puts a threat to the system, as far as I understand, they would liquidate the individual who's taking too much risk, for example. So it's really, really fascinating stuff. Very impressed with the interface here. And I'm also very impressed with the reporting tools they set up. Here's kind of the main dashboard where you could see all kinds of things as far as the VIG price, the Vigor price, you know, all the different premiums that are involved with the lending. I don't fully understand, for example, everything like the solvency 1.02. I'm not exactly sure how that relates. But this is all stuff I'm learning about. Like I said, I spent like the last this weekend tinkering around with it, and it's really, really fascinating stuff. There's some incredible details you can have in here. I'm trying to remember, there was another chart I saw. Let's see if I can find it again, that shows all the different collateral. Yeah, here we go, the collateral ratio. So you can even see like where do you fit compared to someone else. Like if you're right here, you know, Max shows probably, you know, if there's a major fluctuation in the Vigor price, and he's probably, you know, that account's probably at the highest risk of being liquidated. You know, this account here, probably very little chance they're going to get liquidated. But these markets can move really, really quickly, and actually they can even be manipulated on purpose to cause liquidations. And this is what we saw with BitUSD and BitShares. So something I want to be really careful, make sure people are really careful about. Like you can see here, that was a pretty big movement in the price in a short period of time. So if I look at the 1 hour here, you know, there's a pretty good dip. But these are all things that you want to keep track of and be aware of as you're playing around with these systems. Figure out how a change in the price increases or decreases your risk surface profile. And you can see some of that here with they show you these rates, but these rates can change over time. And also when you're coming in here to say, okay, I want to borrow, let's say I want to borrow some Vigor, you know, it kind of shows you what your premium is going to be. Obviously you bump that up, your premium increases and your interest rate goes up because you're taking on a ton more risk, for example, based on the collateral that you have. So these are all things that you want to keep in mind as you're playing around with this stuff. And then in addition, the Vigor stable token is also, you know, it's also another point of risk to some degree, because it's supposed to peg to US dollar, but it doesn't necessarily have to. And in this case it is, and that's great, but I have seen peg tokens jump wildly off of their peg. So you not only have to keep track of this 257 here, but you have to kind of keep track of the larger market. You know, where can I get EOS tokens anywhere else in the market? And this is a very interesting example where the price spiked up quite a bit, you know, went up, you know, more than 10 cents in a very short period of time. So you might expect there to be a market correction, for example. And those are kind of things that you can play around with in these DeFi systems to say, okay, not only am I going to bet one way or the other, but I'm going to bet on leverage. And what I mean by that is you can, as I've kind of done here to play around with, I put some of my debt essentially, and this is actually debt that I bought. You can see I'm not borrowing any anymore, but I could have actually generated this myself with debt based on my own collateral, redeposited it as its own collateral and created more EOS, which then you can, you know, again, funnel back into the system and cycle and rinse, repeat, which, as you can imagine, can get very dangerous as far as how quickly things can move as you start to exponentially increase your collateral and risk as relation to your debt that you're creating with your own resources. So these are all really fascinating things. I would not at all say that I fully understand it. I think probably very few people do, but a part of that is just the education of it, you know, helping people understand. And also too, recognizing that, you know, these lending rates and stuff are not very high at this point. You know, it's something, but it's something to be aware of, in that as you're moving things around and playing around in these systems, and just be really careful to recognize what level of reward you're expecting for the risk you're taking. And then in addition to, like, so here's an example of how this works. Right here, you can see I borrowed 10 EOS by, you know, using my collateral, which then they literally sent me 10 EOS, which were not mine. It's basically debt. And then I'm able to send that 10 EOS to the Nudex exchange and sell it to get more Vigor, which is a stable token. So this is basically selling as if the price was like $2.56, I guess is the one way to look at it, when you take out fees and different things like that. So, you know, you also have exchange fees to think about. So 256, we're at 257, not really a good deal yet. But if it drops down around here, then I could say, okay, cool, I can go ahead and sell my Vigor back for EOS. And if I get more than 10 EOS, then I can close out this loan here and basically get to keep the rest. So let's say I can sell that 25.64 Vigor for, like, you know, 10.5 or 11 EOS, for example. Then I return the 10 EOS, close out the debt before I have to pay a lot of premiums, and I get to keep the rest. This is what I did with BitUSD quite a bit back with BitShares when the crypto markets are going insane. And basically what you're seeing is a hit against the US dollar. The US dollar's purchasing power is going down comparative to the increase in purchasing power of the cryptocurrency. And when you're in that kind of situation, you can mint a stable token like BitUSD, or in this case Vigor, sell it on the market for crypto, and just hold the crypto. So when the crypto goes up in value, when you're ready, you then close out your loan, get the stable token back, and get to keep the rest. So if cryptocurrency goes up like 20, 30, 40%, for example, then you're able to capture that. But it's also risky, because if it goes the other direction, well, then you're screwed. Because you could not only lose your main collateral capital, but you might have to go out on the market and add additional money to buy up more to close out your loan before you lose your capital. So it creates these really interesting market cycles that could potentially create more volatility. But at the same time, you have people betting both sides. So there's another argument to be made that the more people that participate in these systems, the less volatility you're going to get. So that's kind of my quick and dirty overview, and I'm curious what you think. Do you think that these DeFi systems, one, do you think they're secure? Like I was pointing out, we don't really know, you know, who controls these contracts per se, or exactly what's in the contract. I mean, a lot of the code is very complex. If there's a bug, we saw with the DAO hack, for example, you know, millions and millions of dollars got exposed. You know, it's tricky stuff, and being able to use these things and trust them is challenging. You know, there's a lot of money that goes into auditing banks and things like that to ensure that people's money are safe, and they have the FDIC insurance and these kind of things. Well, in this case, you know, the community is the insurance. So we have to kind of think through how much of that we trust and whether or not that's something, you know, that is sustainable. And so this is what we're going to find out. I personally think it's awesome. I'm actually really excited about all these experiments in governance and experiments in decentralized finance. I think, you know, when you look into the central banking system, starting from the early gosh, late 1700s on to where we are now, it's seriously a cartel and a scam. I mean, it's pretty obvious when you look at how the nation states and central banks have worked together to fund wars, to basically manipulate markets, to have full control over the dollar, which is now the world reserve currency. And so, I did a talk in 2013 about this, how Bitcoin is more disruptive than the internet because it creates a situation where, the very thing that you use to measure value, the reason you're away from your family and your kids to go work, is controlled by someone other than you. With hyperinflation, all these things that could be very dangerous. So anyway, I've got my little, I got my little FIO logo here. How do I do that? Because I am representing FIO as a managing director. It's what I've been focusing on quite a bit lately over the last year and a half or so. And the Foundation for Interoperability is a way to make cryptocurrency easier to use. So even with these kind of DeFi systems, instead of having to work with all these different contracts like I was showing you, how cool would it be to just like fire off some EOS to a lending deposits at Vigor, for example, and you could do that from any wallet. So let's say the market's going crazy and you're like, oh man, I need to do something real quick, and you just fire it off from a web wallet while you're walking around. If you don't have access to your desktop, to do Scatter or Anchor or something like that. These are different examples of how we could use user-friendly names and use the FIO data, the actual kind of metadata to store the contract information that's needed, such as like the username and what function they're calling, whether they're lending or borrowing or whatever it might be. So these are interesting tools, many different tools out there, FIO and others, to make cryptocurrency easier to use, to make these systems more decentralized and democratized, which I'm really excited about. Hope you are as well. Hope you enjoyed this being my second live stream. We'll see if anybody gives it a watch and what they think about it. I'm going to now get to work. Happy Monday.